Most Canadian homeowners receive their home insurance renewal notice and pay it. They do not review it. They do not question it. They do not check whether anything has changed. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to walk through what to do in the 2 to 4 weeks before your renewal date, the specific steps that can affect what you pay, what coverage you have, and whether you are even getting the best available rate. A renewal notice is not just a bill. It is an offer to continue coverage on updated terms. You can accept it, ask questions, adjust parts of the policy where possible, or shop for an alternative before the renewal date. Many homeowners accept it without realizing they may still have options before the renewal date. Here is what to do before you accept. Step 1. Read the renewal notice before anything else, not just the premium, the full notice. Most renewal notices include a schedule of coverage that lists your dwelling replacement cost, your contents limit, your deductible, and any exclusions or endorsements on your policy. Read each one. 3 things to look for specifically. First, has the dwelling replacement cost increased significantly? Insurers update replacement cost estimates at renewal, and those estimates directly affect your premium. A large increase in the estimated replacement cost means a large increase in the premium, even if nothing else changed. Second, are there any exclusions, endorsements, limits, or wording changes that differ from your previous policy? Do not assume the renewal is identical to last year. Third, has your deductible changed? If anything in the notice does not match what you expected or what you recall from your current policy, ask your broker for an explanation before you pay. Step 2. Check whether your property has changed since the last renewal. Insurers base their coverage on the information in your file. If your property has changed in ways that have not been disclosed, the policy may not respond correctly at claim time. 3 property changes that commonly affect home insurance coverage. First, renovations. Any significant renovation should be disclosed to your insurer, including the approximate cost of the work. Work that increases the value of the property or changes its systems, electrical, plumbing, HVAC, affects both the replacement cost estimate and the underwriting risk profile. Second, new outbuildings or structures on the property. A new garage, workshop, or pool may not be covered under the standard policy without a specific update. Third, changes in how the property is used. A basement suite, a short-term rental arrangement, or a home office used for business visitors can affect coverage eligibility. If any of these apply, disclose them to your broker before the renewal is processed. Undisclosed material changes can become a reason a claim is delayed, reduced, or disputed. Step 3. Ask your broker how many insurers were quoted for this renewal. A broker who has access to a panel of insurers has the ability to shop your renewal across multiple markets. Some brokers do this actively, some do not. Ask the question directly. How many insurers did you quote this renewal? A broker who has genuinely shopped your renewal can answer immediately. If they cannot answer clearly, or if the answer is 1, the renewal may not have been fully shopped. In a hardened insurance market, the difference between the rate your existing insurer offers at renewal and the rate available from a competing insurer can be meaningful. Your existing insurer may not be offering you the most competitive rate, even if you have been with them for years. There is also a timing consideration. Most policies renew automatically if no action is taken before the renewal date. That means, if you want to shop your renewal, you need to start the process at least 2 to 3 weeks before the expiry date, not the day the notice arrives, and not the day before renewal. Give your broker or any competing insurer enough time to quote, bind, and confirm replacement coverage before the current policy expires. Some homeowners assume that if they find a better rate after the renewal date, they can cancel and switch mid-term without cost. In most cases, mid-term cancellations involve a short rate penalty, meaning the refund you receive for the unused portion of the premium is less than a prorated amount. The timing of your review matters because shopping before the renewal date gives you full flexibility. Shopping after it may cost you. One more thing on step 3. If your broker cannot tell you how many insurers were quoted, ask them to shop the renewal before you sign. You are not obligated to accept the first renewal offered. A broker who has access to multiple markets and is willing to shop on your behalf is one of the most useful tools available to a Canadian homeowner at renewal time. Step 4. Check whether any discounts you may be eligible for are applied to the policy. Common home insurance discounts include new home or newer build discounts, claims-free discounts, bundle discounts for holding both home and auto with the same insurer, monitored alarm discounts, and loyalty discounts. Not all discounts are applied automatically. Some require disclosure or documentation. Ask your broker, is there anything I might be eligible for that is not currently on the policy? The answer may be no, but the question takes 30 seconds, and the answer occasionally reveals a discount that was not applied. Step 5. Understand what your renewal does not include. Standard home insurance policies in Canada may not automatically include overland water, sewer backup, or earthquake coverage. These are often separate endorsements or optional coverages, depending on the insurer, province, and property. Water-related losses are especially important to review before renewal because they can be costly and coverage availability varies. If you do not have overland water or sewer backup coverage on your policy, ask your broker whether they are available for your property and what they cost. In some areas, overland water coverage is not available or comes with significant restrictions. Knowing what your policy does not cover before a loss is more useful than finding out after. If water or sewer backup coverage is not currently on your policy, and you are in an area with a history of flooding or municipal sewer issues, that is worth a specific conversation with your broker before the renewal date. Here is the reframe. A home insurance renewal is not an administrative task. It is an annual contract review. The insurer has updated their assessment of your property and is offering you new terms. You are entitled to review those terms, ask questions, and compare alternatives before accepting. Most homeowners skip this review entirely. The ones who do not save money catch coverage gaps and enter each policy year knowing exactly what their insurance does and does not cover. The review does not need to take long. For most homeowners, reading the renewal notice carefully, making one call to a broker, and asking 3 or 4 specific questions takes less than an hour. That hour is more likely to produce a measurable result than any other single action a homeowner can take before their renewal date. What to do in the next 2 weeks if your renewal is coming up? Read the notice fully. Check for property changes. Ask your broker how many insurers were quoted. Ask about unapplied discounts. Confirm your add-on coverage for overland water and sewer backup. The free homeowner checklist is in the description. It covers the renewal questions worth asking before every policy decision. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.